Hey you guys, welcome. My name is Shaquan from SLFX Trading, and if you want to get the technical analysis or the chart perspective of Dogecoin, continue to watch this video. Now, if you're new to me and you don't know who I am, my name is Shaquan and I am the owner of SLFX Trading, and I help people learn how to read price charts better so they can make their own trading and investing decisions outside of the fundamentals. Now, fundamentals is not my strong suit, and I admit it every single week when I teach, because there are so many other people who can teach you guys fundamental analysis. I'm more of a visual person. I'm more of a hands-on person. So I personally like getting my hands dirty with technical analysis. And technical analysis is when you're on these price charts and you're dissecting the information of what's going on, because the fundamentals represents these price charts. The price charts represents what's going on in the fundamentals. So I'm that girl. And if that's something that you want to learn how to do, then keep watching this video, okay? So I'm going to walk you guys through the process of what we do to look at our price charts. Now, there are so many ways that you guys can look at your price charts, and some of y'all already know how to look at price charts if you're watching this. And if you don't, I'm going to give you some behind the scenes details that can kind of help you do that. But what better way to do it with cryptocurrency, because there's a big rave about Dogecoin right now. So let's get into it. I want you guys to think about Dogecoin for a second and what it is that I'm looking at. The symbol for it is DOGE. Okay, that's the Doge. Now, I am looking at it against the United States dollar. That's how the price is fluctuating in. What it basically means is you take your dollar, your currency, and you can trade it with or against the Dogecoin. So you're using your money to purchase the Dogecoin. As an investor, whether you're doing it through a wallet or whether you're doing it through a crypto broker, or you can trade it for temporary funds. You could, I know some people are doing it through Robinhood. I don't know about Webull or anywhere else. But basically, if you do it through Robinhood, you don't own the coin. You're just trading your currency for the Dogecoin temporarily without ownership. But if you do it through a broker with a wallet where you can store it, you have the ownership. So that's the biggest difference there. There's always a difference between trading where you don't own an asset or you don't own the coin. And then there's a difference between investing when you can own ownership in something. So I want that to, be a difference. But how do we see the price? We can see the price by looking at crypto on the actual exchange, like Coinbase or wherever you're buying your Dogecoin at, or you can be like me who looks at price charts through tradingview.com, where I can see any price chart that I like, right? And so what I'm looking at is the price over here on my price scale located to the right hand side of me. And at the moment in this black box is telling me that price is trading around 40.48 or 48 cents right now, and that this candle that's forming, this red candle right here, is going to close in 9 hours and 34 minutes. The crypto market is a 24-hour market, and so within 9 hours and 34 minutes, a new candle for tomorrow is going to start to form. So that's something that you have to know. We have our red candles that tells us who's the sellers, or when price goes down for the day, because I'm on a daily price chart. That means every bar prints within 24 hours or every 24 hours. And then we have the green candles, which says, hey, we're the buyers in the market for the day. What I am looking at is the overall picture versus the up and down movement of every single day. I want the full view of what's going on. This is how we get the full view here. Very quick. We look at numbers at highs and lows. Think about a wave. You have the top of the wave, you have the bottom of the wave, and then you have in between the wave. What I so much care about is the top of the wave and the bottom of the wave, because everything else in between is a range in between what's actually going on. Watch this range here. We have 44 cents, we have 15 cents, we have 73 cents. What does this mean? This means that when price passed 44 cents, this is the green bar, right? The moment that price passed, it means that buyers said, we see that there is value in Dogecoin, and so Dogecoin has value because we're buying it. The moment that price stayed above 15 cents, which this candle represents the lowest exchange rate of this black line, if you guys can see it really well, this is called a wick. Price could not go below this price point of 15 cents. And this was the last fluctuation of buyers. And so what this means is now that there are buyers in the market who've pushed price up past the last highest price, If we believe, or if you believe, because this is all about you and your money, if you believe that Dogecoin is going to have more buying pressure or more upside to pass the highest price now at 73 cents, we can round it to 74 cents, the price has to pull back so you can participate more. And here's what I mean. You don't want to buy at a high price. 74 cents is a very high price to buy. What you want to do is see a price will pull back to a cheaper price, but not past the lowest price, which is at 15 cents, where the last fluctuations of buyers were. So you need price to pull back and prove, meaning it gets bigger green bars where you see the fluctuation of the market. You see buyers in the market. You want price to prove the buyers are coming back into the market at a cheaper price. If you buy high, you have the possibility of price pulling back against you, and now you're going to see red in your account because you've done what's called buying early, right? The buyers have kind of stalled out. This is the highest they want to go for right now, even if people believe price will get to $1. More people only want to participate when they can buy at a discounted or cheaper price, and that's what we like to do as technical analyzers. So what I'm thinking, this is just from my perspective. Some of you guys may trade something different. I'm a trend continuation trader. It's okay if we see things differently, as long as we understand that if we see value, then we'll, buy it at a cheaper price, and prayerfully price runs up, right? This is a trader standpoint and an investing standpoint. There's a key difference here. If price can stay above $15, and I'm wanting it to come to the last fluctuations of buyers were around the 27 cent mark. If price can pull back to 27 cents, and it doesn't have to, but if it can pull back to 27 cents, I think this would be one of the best places to buy price. Some of you guys, maybe if you're supporting resistance trader, you may be looking around the 44 cent area for price to continue to push up. And there's nothing wrong with that. Like I said, many of us can see different things and view different things. But if we can agree that we need price to stay above 15 cents, the last fluctuation of buyers, then we'll be fine, right? We're saying the same thing, just at different buying price points. So that's how I'm seeing Dogecoin in a nutshell. We don't have to get too deep into it. Like I said, this is from a technical analyst perspective where I'm watching the charts. I would prefer price come down to 27 cents. If you learn how to read these price charts because you're looking at this high and price is touching this high around the 44 cent range, you may be wanting to stay above 44 cent range. Wherever you say you're comfortable with buying more Dogecoin, it's up to you. As long as it does not pass the lowest number of buyers, then you are fine. This is supply and demand. The more people you have buying, the better. But the moment that price goes below your last best buying position, then that's when you can say, okay, the value of Dogecoin could go further down because the buyers are not putting their money into this thing. So we need to look at, something different. Now let's go look at something different, which is going to be Ethereum, because Ethereum just did something that I like. You guys, Ethereum just passed $4,000. Now, I am a buyer of Ether. I am an investor of Ether. Or Ethereum. I call it Ether. I don't know why. Maybe the part hasn't caught up with me yet. But Ethereum, I like Ethereum. So, as you guys can see, watch the fluctuation here. Watch the buyers. So, let's just look at the highest numbers here. Price went from $2,558, $2,640. Then it crept up above $3,536. Then it crept up above $3,618. The last buying pressure was here at $3,358. And now we've continued to push up on Ethereum, and it's crossed $4,000. Now, fundamentally wise, once again, I'm not the fundamentals trader, but I'm looking at news reports. I'm looking at people on YouTube who are speculating the news for me, so I don't have to do it, which is why I'm technical analyst, because people are doing it for me, right? We have our own lane. But what I'm seeing here is that, okay, since Ethereum has crossed the $4,000 point above the $3,618 point, this means that they see value in Ethereum. I prefer to buy Ethereum as an investor, trade Dogecoin as a trader, because I believe that Ethereum has more buying power. Or more value, but that's just me personally. Someone could think differently. Because while I see a lot of people are talking about Dogecoin, it's like we're getting away from what Ethereum is doing. Even Litecoin passed $400, and there's not a lot of talk on that. So if I take you guys to Litecoin and I'm going to do analysis on this with you guys, you'll see that today Ethereum passed up towards $413 and maybe more, maybe less, depending on how you look at this price chart. I'm going to say 414 just to round off. But it's past that number, right? And so what I'm looking at is, well, the last buying pressure was down here around $333. So we get like a slight pullback. I'm really hoping that, you know, price could pull back. I can buy more Litecoin and, you know, add some more coins to my position. And then we go from there and we hold as the investor. As long as price stays above that number, we're cool, right? If we go below that number, I'm still a holder. That just means I get to buy at a cheaper price. So you guys, that's a little tidbit for the crypto. Really quick, it doesn't have to be that deep with technical analysis. I know there are people who are deeper with fundamentals, and I think that you have to go deeper with fundamentals. I'm just going to be the person who's going to take your information and trade it due to the price charts, okay? So if you guys have any questions, make sure you comment below. If you can add value to what I've just said here, make sure you comment below. And other than that, you guys, y'all be safe out there trading, be safe out there investing. Make sure you only risk what you can afford to lose and or replenish. And I will see you guys in the next video.